Hello and welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Did you notice the tribute to old Wayman Tisdale there? I know we were talking about him yesterday. He did pass away there. I read the whole thing about him there. Sad story, but amazing bass player. So we thought we'd hit you with some of the music to maybe cool you down on a day like today. I see your comments there about the heat. Yeah, it's hot out there, that's for sure. Hey, while other financial advisors are playing checkers, we're playing chess, and I got a good one for you here today. We set up or helped a client kind of get this going here to set up a swap fund inside of a Nimkrut. Have you ever heard those words before? This will actually help them literally save millions of dollars in taxes, and I'm not just saying that. That was really, really cool. Just took an extra level of thinking and a little bit of education on the client's part to let them know what they were doing, and that's awesome. I love that because I know we focus on retirement and stuff a lot here, long-term goals, but when I can help you avoid legally taxes with the same tricks that the rich people use, I love it. I love it. And I learned a few things myself. Anyways, if you want to join us, jazzwealth.com, we will be happy to work with you there. You can even schedule a call if you want to see how we do things. No sales pitch. We'll just talk to you for a while, and if it works out, it works out. If not, we won't bug you. Like, we don't even have a thing that like keeps bugging you or something. All right. Anyways, let's take a look at what we got here. We're going to go over the markets. We're going to go over some stocks. We're going to go over NVIDIA, all the great stuff that's coming up here. Most importantly, since the market's closed, the next focus starts tomorrow. The Fed chairman, all the big financial people out in the world there, the billionaires, the tech startup people, they're all going to go to Jackson Hole, Wyoming. In fact, they're probably already there, enjoying probably a lot nicer weather. But that starts tomorrow. And what happens is they meet for a day. There's seminars and speeches and stuff. And then on Friday, usually Friday at 10 a.m. in the morning is when Jerome Powell does his speech. And everybody will be watching. You turn on a financial channel, it's going to be there. So my curiosity was, is this really like a market-moving event? Should we care? And I'd like to dive into that here for just a second. It's not really a market-moving event. Here is the performance of the market throughout the day for the last group of them, the last 6 that we have Jerome Powell actually speaking. I'd like to point out here a couple things. Obviously, it is not normally, on average, a market-moving event. There are some outliers in here. 2020, by the way, the green line, that's the only time that he didn't start at 10 o'clock. He actually started before the markets opened because it was done remotely during COVID and stuff. So that was like a Jackson Hole online kind of a thing there. 2019, you look at this and say, ooh, oh, he must have said something bad. It must have been horrible. No, be careful of the data there. This happens to be the exact same day that then President Trump, who's also in the news today, then President Trump actually started tweeting out the China trade war. Remember that, when that was all going down? That was the day he started tweeting about it. Here's where he tweeted about it. It coincided with the Jackson Hole speech, so you can't really blame that one all on him. Last year you can, though, but ideally you could see that unless there's a major change to the negative, which we don't expect to hear him say at all tomorrow, that it's really not much of a day. Like, okay, what's he going to say? What are interest rates going to do? Are we going to start slowing things down? Are we going to use the new Atlanta Fed? What was it, 5.8% third quarter GDP growth? Does that mean he's going to want to keep rates higher for longer, raise them a little bit more? We'll get some clarity on that tomorrow, but that will definitely be in the news. And so we'll see what happens. So you got to expect the markets to be a little volatile for the rest of the week. You got to expect bonds to be a little bit more volatile for the rest of the week. In fact, that's your reason for the market being higher today for the most part, because bonds took a break, meaning prices went up, yields went down. Who does that affect? Those big tech stocks that borrow money for the long term, that have obviously costs that wrap around current levels of interest rates. Well, when that looks more favorable, those stocks look more favorable. That's not including the earnings from NVIDIA after hours here. So today, in the stock market, we saw a more consistent and sort of confirmed relief rally, really due to the relief rally or dead cat bounce, we'll find out, in bonds, right? So a huge move over there in bonds, and that is your reason, right? That helped a lot of those companies that borrow to grow and really sort of push their earnings out into the future. It really helped them there. That's at least a good sign. If you look around the NASDAQ, naturally, that's going to be a big mover, and that's because of those bonds as well. The majority of those names, whether they're tech, biotech related, they're all in that space and on that index or exchange. So you saw a rally there. You got the Dow trying to bounce off of what we would call minor support. And so far, that's what's happening there. And the Russell off the 200-day moving average, finally a little bit more commitment there. That's something you can wrap your head around a little bit. Like the last couple days, you're like, yeah, I don't know. I need more information. You can wrap your head around that and say, okay, cool. More people are committed to a bounce. We don't know the degree yet, but more people are committed to a bounce than are worried about a decline. Okay, cool. I can feel good about that, at least for a short-term bounce in the market. I'd also like to point out gold. Off the 200-day in a more convincing way. Still some overhead issues to deal with there for gold, but if you're a gold bug and you like that stuff, good. You finally got a bounce. I tend to be against gold just a little bit. I think it's kind of a worthless thing to spend time on unless you believe that the world is truly going to end. Hey, we shoot Russian people out of airplanes and they just fall. Oh, wow, it turns out that was the guy that went against Putin. Oh, okay, that's going to be in the news. If you think things like that lead to like the end of the world, okay, you're the gold person. But, you know, it's a long shot. Also like to point out oil continuing to pull back here, almost back to the 200-day moving average. Oil inventory numbers helped out today. That helped us show there was more available oil than, well, demand is still high, but there was more available oil than we had predicted, right? So that helped oil prices a little bit. Keep in mind, demand is still almost historic highs for oil with what's available out there. All right, looking around, longer term view, right? The longer term view on the economy. I want to kind of explain a couple different ways you can look at this. So if you look at regional banks, and you can use like the KRE or something if you want to see sort of the performance. But I'm talking about if you look at what they're doing on a day-to-day basis as a company, as these regional and small banks. You can look at, and economists like to look at commercial and industrial loans. That's almost one of the higher margin things that they offer. So if there are more commercial loans being applied for and given at these banks, awesome, right? But for studying the economy, it helps you understand, like, are people building more commercial and industrial projects, right? That helps drive things. That's a big margin type product. And so, unfortunately, commercial and industrial loans, as represented by the Kansas City Fed, I believe, they do a survey twice a quarter. Now, it's often. So they do a study twice a quarter, and they found that commercial and industrial loans are actually down now for the 8th month in a row. And they said, well, why? Hey, we're the Fed. Answer our questions. What's going on there? And then all the small and regional banks said, borrowers are not so much focused on borrowing to grow anymore. They're focused on margins and cash efficiency, meaning they're saying, well, let's not grow. Let's not go build those buildings right now. Let's just look at what we have, probably a lot of refinancing coming up, and make sure that we have the cash to take care of that. So I wanted to point that one out there for you as well. Other things that we can look at, there's a research company called Black Book, and they primarily focus on autos for the most part. And so they publish the wholesale used car prices, meaning not what you pay at the dealership, but what the dealers barter or sort of bid against each other for to get cars to then hopefully clean them up and do it, sell them for a profit or whatever. Well, if we take a look at that, Black Book says wholesale used car prices are actually down another 1%. They particularly focus on cars that are between 2 and 8 years old, so you get a good feel for, like, realistically, what cars are people out there that are buying. These are the big dealers that turn over a lot of volume. They're not dealing in 15-year-old cars, right? You know that. And so used car prices in the wholesale market down 1%. Now your thought is, oh, I was going to go buy a used car. That means prices are coming down. No, it doesn't work that way linear. It's kind of like when you say, oh, the Fed raised interest rates, so my credit card rate will go up. That's not how it works. They go hand in hand. They're somewhat correlated, but that's not exactly how it works. Same thing in the used car markets here when it comes to the wholesale division. Remember, in the wholesale division, there's typically less volatility in wholesale prices. These are the pros, right? This is what they do for a living, so they know, give or take a little bit, where they should be on that car. When there's more volatility, it means there's less demand from buyers, right? Because now you got guys on both sides of the fence going, I see demand, I'll bid that car up. You have other guys going, I don't need this one. My lot's already full. So it's not a good sign overall, for wholesale car prices to fall, you can also use Manheim as well. That's a public one that you can use without paying to see used car prices that not wholesale, but that sell for retail. You put those things together and you say, maybe a little weakness here in the economy. How are we coming up with 5.8%? I hope it's right, but how do we come up with that? Seems like it's a little bit weak. I want to add one last little thing to this, and then we'll move on. There's a fun thing you can do. I've done it for clients in the past. I'll do it for you guys now, where instead of looking at house prices, always think an extra level deep, right? So you looking at NVIDIA after hours, but you're just looking at the price of the stock. There are people looking at the fundamentals. There are people going, wait a minute, their earnings look good because the Saudi Arabians are hoarding chips, and so is the US. And oh my gosh, so this is not a long-term demand kind of a thing. This is a short-term, almost kind of like COVID-esque response to like, oh, let's just hoard things like that, right? You look a level deeper. And so then you have people that look even further deeper and say, well, NVIDIA is doing what it's doing. On our podcast on Friday, we're actually going to talk about what's the spillover effect. And if I could stop on that for a second, remember the pot stocks? Oh, sorry, the goofy stocks? We don't call them that here, YouTube. But remember those stocks? Everybody's like, oh my God, these people are going to sell it. They're going to make lots of money. They can do it now in certain states. And then after a while, people said they need fertilizer. They need lights. They need a warehouse to do this in. They need land to do it on. Could I not go make money from that stuff instead? That's what I mean in AI. Oh, NVIDIA, Microsoft, Alphabet, Amazon, and a handful of others. Oh, they're the leaders. They're getting this thing going. But isn't there a lot of other moving parts that we could, be a part of here, and other companies that'll see benefits from that? That's what I'm talking about when I say look a level deeper. Let's try something. So we say home prices are up. All right, it doesn't really help us. Let's look a little bit deeper to see how it affects you. So what we're going to look at is relative to your dollars. So how many hours, if you have a regular, what we would call non-supervisory position, you're not in a higher up, you're not a C-suite person, you're sort of just a W-2 person that's got a good job, right? How many hours do you need to work in order to pay for your mortgage payment? If you were to go out today and buy a house, how many hours do you have to work? It's really cool. If you're going to put 20% down, you in fact need to work 70.3 hours. I could have just told you that number and it's like, okay, it sounds like a lot, maybe, I don't know. Well, compare it to history. You have to work more hours than you've had to work since about 2005 in order to cover your mortgage payment. I don't know that that's a bad thing. Maybe you're willing to work those hours. That's if you put 20% down. If you're only going to put 5% down, do an FHA loan or something like that, you've got to work 83 hours, essentially just over 2 weeks of full-time pay to afford your mortgage payment. The question would be, look back over here. How was the economy doing during that point? Was it speeding up or was it slowing down? I'll give you a hint. It was slowing down. To give you a little bit of a hint there. Over in here, you work less than 50 hours to afford your mortgage payment, assuming you put 20% down. Well, that's because of lower rates. So we could look at interest rates, we could look at home prices and go, here's some information. This is a little bit cooler to show what the average person is going to have to go through to buy a home. The higher that goes, the more people go, I'm not doing that. No, that's a lot of work. I'm sorry. And consider that the average work week is not 40 hours. It's actually lower than that because we're working less since the internet came out. I don't know what's happening there. All right, we can look even further. Say you want to buy a house and you go, that's fine. I'll work the 70 hours. I don't mind. How many hours do I have to work in order to have the down payment to buy the house? Okay, so if you're going to put 20% down, in fact, you got to work about 2,700 hours. It's almost 2,700 hours in order to do that. Do you still want to buy a house? They should show this to people. Like before you buy a house, and you sure? You want to, okay, you're going to put 5% down. You got to work 688 hours. That's a big number. Maybe I'll wait and have a bigger down payment. Maybe I'll have some extra cash and save up and buy down my rate. I don't know. I'll come up with something. Maybe I'll buy a duplex and someone else can live over there and help me pay my mortgage payment. Maybe I'll have a roommate. I don't know. And so when you look at it this way, it's kind of cool to see at some point people are just not going to work more in order to live the American dream of buying a house. Something will have to give. And I'm not a doom and gloom type person, but we are on that cusp of, wait a minute, yeah, those prices can't go up. And I don't care if there's less inventory. The inventory that's there can't sell because people aren't willing to work that much to buy the house. So really kind of cool. And I know I spent a little more time on that, but that's because other than a couple other things, there's not much going on. And that'll all start tomorrow, right, with the Jackson Hole speech. Hope you learned something. I do. All right, let's start off with some earnings. There was some great. There was some as expected, and then there was some really nasty out there. Foot Locker would fall into the really nasty category. They are stopping buybacks, which that was a good idea when the stock price was lower. Yeah, they need to hoard the cash now. Their inventory is up 11%. You might have saw this affected Nike as well. So less people coming to their stores to buy shoes. They're making decisions not to buy those retail level shoes. At Foot Locker, they're choosing to go other places. And so they said, oh, we're going to have to stop our dividend, man. Oh, Jesus, we better focus on our cash. Go back on our nice show that we do here every day. We talked about what companies get rewarded for in varying points of an economic cycle. Do companies get rewarded now for hoarding cash? No. We want you to do buybacks. Who did the buyback today? Was it Dimacron? Dycom did buybacks. Okay, can't see it. Stock gets rewarded. They say, we're going to buy back $150 million worth of our shares. Yes, that's what we want to see you do. Foot Locker says, we're going to stop buying back our shares and not pay the dividend either, so we have more cash. Something's wrong. Right? That's how people respond to that. So we're at that point where we don't want to see that. Kohl's, this was pretty good. So Kohl's beat earnings expectations by double digits. That's impressive, but wait, there's margins, right? Are your margins higher? Gross margins were 38%. That is higher. Inventory was down 14%. Awesome. Great. We're making more money, and we can prove that people are coming here and buying whatever they sell off the shelves, right? I don't think I've ever been into Kohl's, but clothes and stuff, right? I've seen the store. I know what it does. And so because of that, lower inventory, higher margins, they finish the quarter and they go, guess what? We have $70 million more than we had before. Okay, that's going to help the stock price. That's what people want in sort of a questionable economy. Abercrombie and Fitch, better than expected earnings. They're even positive going forward. We're buying fancy stuff here. Okay, cool. So up 23%. Why? Inventory's down. And in this case, their total profit margins were up, I forget, darn it, 2%? 2% or something like that. 2.1%. Great. Good earnings report. All right, so that was the good. Back to the really, really bad. Peloton. You know they had that problem with the seat on the bike, the really expensive bike that most people don't use. They just kind of sit there. So Peloton down 22%. They said, these recall costs on the seat. Turns out we have 750,000 people that they want their better seat. And this is costing us more. Costs us more to get the stuff. Costs us more to ship the stuff. It's really tough. Also, people are kind of spending their money on going out. They're not pedaling on the bike. They're going to the bar and drinking. That's not a joke, right? So now that's numerous companies that have said the experience is what people are spending their money on. The stuff, not so much. So if you want to buy a Peloton bike, I mean, maybe there's a good deal out there somewhere. You put it in there and it could be your dust collector. Bath & Body Works. There we go. This goes into the not so great and sort of as expected kind of a thing here. Overall sales were down, but their margins were higher, and this is all because of, they said, they used the word, cost optimizations. It was their word, right? So there you go, a decent low for them, and if you believe that cost optimizations are a reason for them to grow, no, then you would think the stock would go higher. Cost optimizations is a defensive play. It is not a, hey, I know, let's just not hire as many people and not have as much stuff on the shelves, and that'll make us worth more. No, they're going into defensive mode. Retailers are going into defensive mode. By the way, fun fact, why do retailers report now? Why are they the ones to report at the end, way at the end of the earnings season? Everybody else has already reported. What are these guys doing? Why are they so slow? Well, it's because of Christmas, right? So you have the Christmas, between, what is it, a couple days before Christmas to the end of the year. Well, there's a lot of transactions happening. So people are still buying stuff, people are returning stuff and then buying other stuff. And so it's hard for them to close out their books at the end of the year. So they say, give us 30 more days. And because they do that, their second quarter doesn't technically end until a month from today, right? A month before today, a month ago, right? So that's why they do that. And so every earnings season, you'll say, oh, the financials, they're ready to go. They better have their numbers right. And then we work our way all the way to Walmart, which is the first one to report, the meaningful one anyways. And then after that, it's all the retailers because they're just a little behind because we're buying all kinds of stuff and doing all that, whatever. So there you go. Okay, I'll read off some of the stocks for tomorrow's earnings, and then I'll take your questions if you have any. So also remember, Jackson Hole starts tomorrow. Tomorrow is not a non-event. There are multiple Fed presidents that will speak, both voting and non-voting members, and that sets the tone for Jerome Powell to kind of sweep up the back end and say, yeah, everything they said was right, or yeah, we're going to vote on this and see how it happens. So tomorrow will be interesting. We also have Burlington Coat Factory's Dollar Tree, which is going to make it a little safer for you to work there if you have a job there. Hanes Celestial, what does Warren Buffett say? They cover the asses of the masses, and I can say that because Warren Buffett said it. So you got The Gap, Intuit, Nordstrom, Ulta Beauty, and Workday after hours. Workday is your best performer, by the way. It doesn't have the longest of history there, but it has beaten 91% of the time, and it is up 6 of the last 8 earnings reports there. So that is that one. Point out NVIDIA real quick. Yeah, still hovering there right around between 510 and 515 over the last 20 minutes or so. If you look at the chart, that will be new highs right there, at least to start the morning. We'll see what happens after that. So, hey, congratulations. You're paying now 22 times next 12 months earnings. So that's very high. So I hope that continues for you. Good luck. Anyways, that looks like it's going to start higher tomorrow. Let's take a look at your questions and see if you have any questions. Pricing power, cost optimization. Yeah, those big words. I would love to be a CEO one day. In fact, I applied to be the CEO of Chipotle when they got rid of the last guy, and they didn't call me back. But I would love to be that because I would be the guy that's just like, did we sell more? No, we're not selling. Why are we not selling more stuff? Let's keep it simple, easy for everybody to understand. Not a lot of issues with theft on the recent retail earnings. Seems like a big deal on the other day. Dick's really spent a lot of time on that. Walmart and Target spent a little time on that as well. Walmart's really kind of got it dialed in, though. Yeah, you didn't hear a lot of comments about that. That is true. If you like the politics stuff, yeah, presidential debate is tonight Trump, right? So see what these people are all made of there if you want to watch the parents fight a little bit. Yeah. Tom says that last one was a surprise. Yeah. I recorded this one, not so much of a surprise. Everybody expected a beat. It's a little bit better than expected still, but yeah, you're right. And I always worry about a stock going too far too fast, but I worry about how they beat earnings there. So maybe if tomorrow's a dud, we'll go through that with some visual something or other. Yeah. People still chasing and they're the ones still winning. Yeah, I wish the best for those people, but that's a big move. $50 just out of nowhere. Yeah. How many people are in the debate? There's quite a few of them, right? This is a Republican debate. Cody, do you know how many people are in the debate tonight?
8.
8 people?
I believe it's 8.
Damn,
yeah.
I would have said 6.
Yep.
Okay.
Yeah, it's a star-studded cast.
Star-studded cast. Okay.
Yeah, Chris Christie.
Oh,
There's some guy that's not going to be able to stand. That's exciting.
Is he going? I saw the guy fell or something.
I saw that he will be there and not be standing, I think. So he might be a game time decision, though. So
yeah, it could be game. Yeah, that's right.
Go follow Adam Schefter. He'll keep you posted. You don't get that. All right, cool.
That's where I drop off. Yeah. Okay, see ya. You like PayPal to try to find a bottom? You and a lot of people, right? So the reversal, yes. I like that when things happen like that. In particular, I'm talking about this flush right here. I love when people sell and immediately are proven, at least in the short term, to be wrong. So you get a little volatility there. I'm not I'm not one that's going to say, oh, yeah, sure, that's exciting. I'd like to buy that one there. If you're a short-term trader, I gotcha. I understand that one. But if you're looking for that longer-term investment, I'm not sure you want to be all in with your position there. Yeah. J-Dub, NVIDIA, will I be able to roll calls tomorrow or the volatility crush make it meh? Remind me again what expiration and strike price you have, sir? You got the RYLD as well. So you like a little bounce here with the pullback. Yeah. Vivek, yeah, he's all over the social media. I've seen him quite a bit. I don't know much about him yet, but hopefully they talk about stuff. You know what I mean? I get it. This is show and tell for them, first time out there and all that. Hopefully we can get down to some of the good stuff. I really hope this isn't one of these cycles where it's just they fight the whole time and you're like, that guy's not as bad as that guy, and then that's how we do it. I don't like that. Looking at moving some cash in a brokerage account with Vanguard. Need to do simple. Can you suggest total market ETF value fund? Not looking for advice, only suggestions. You need to move some cash. And are you saying you're moving the cash into a simple IRA? I don't think so. I can't make suggestions. I can tell you the most popular market, like broad market ETFs. I'm not saying any of these are better than the other, but the SPY is probably obviously the S&P. The QQQ is the NASDAQ, if you like that. The IWM is the Russell. I tend to show the futures when we do this here, but those are the most popular ETFs for index-related investing. Vanguard, if you like them better, you've got the VOO. The VOO and the SPY, the same exact thing. Just if you prefer the brand, you look at that. I think they even cost the same. They're very, 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 very inexpensive. Grinding retire, I missed your question. Yeah. Hey, Dustin, Russell, RYLD, I'm in them 1946. You got 361 shares. Should you build up to 500 or keep dripping? Why? That's an odd question. So if your goal is to get to 500 shares, don't you like a discount? Are you not? You don't like a little discount there? But if you're saying, hey, I'm at 361, should I go to 500? That I don't know. I don't know what other positions you have, your balance or anything like that. But if you're saying, I was willing to, average up a little bit faster, I mean, this type of product, doing that in, I can't blame you for that. Now, the one thing I would say there is, if you aren't quite sure yet, there's no actual hurry, right? Because you're already past your ex-dividend date, so there's no hurry. You've got 20 days still. So I like a discount. If you say, I'm going to hold out for a little bit more, the clock's not ticking. It's not moving against you there. So you got time on that one. You got till like, what, the 20th of the month? Next month? Yeah. All right, J-Dub. You got the 490, 495 calls September 15th. September 15th. Hold on one second here. Let me see what. You're in the monthly. Yeah, you can roll, of course. No, you're just going to roll to the same exact strike, and you're going to get a credit for that. It's as simple as that. Unless this opens at like 590 or something crazy. But right now, 515 right in there, you're fine. I would think, I know I'm sort of telling you what to do because I know who you are. But yes, you would get yourself a little more time, and you're going to find that you get a credit for doing that. Yeah. CVS announced they will make a generic Humira for 80% less than AbbVie does. I didn't read that one, so I don't know. I can't say on that one. My eyes gloss over when we start talking about drugs, things like that, so I did not. Not going to be the best person to answer that one. Fast Eddie was given AIG stock as part of a long-term incentive. It was 65 a share. It's down to 57. Should they hold to see if it comes back? So if you are only talking about the stock, so my mind's already racing into other planning stuff here, but if you're only talking about the stock and you were given the stock, what's the pressure? You kind of got nothing to lose. Plus, if you do lose, a little bit of a write-off there. I don't know if you need something like that. So I'll leave that question to just hey, what if I had AIG stock and it was down a little bit? This is not the first time you've been down, unless you just got it. Like, no, this is not the first time you've been down. If your cost is 60, how could it be 65? You've had this forever. Okay, so no. Why would, if that doesn't make any sense. So if this pullback didn't scare you before, then this one is not scary and you just sit there and hold it out. I would say that depending on how much it is, you may want to look at a total. What's the game plan on the total end of day? Let's say you sell it at 75. Don't just sell it and pay capital gains tax on there. Think about it. What would the Bidens do? What would Trump do? What would, Bill Gates do? Yeah, I'm trying to pick people that have money. They would not just sell it and take capital gains tax. Come on. No, JW, just don't even think about it. You're going to roll. That's an easy one. You're going to roll. You're going to take your credit. You're going to add it to what you've already collected. Make sure you keep track of that, by the way. Yeah. You think the SPY is 2x the ER of V? No. The SPY is not 2x anything. It's a pure play. And I don't follow the VU much. No, they're the same thing. They're both pure plays. They're not leveraged in any way. No. There are leveraged ETFs, and those are not the ones, but those two are the same. Yeah. Sweet. Okay, get some rest. Get some rest. Tomorrow starts the Jackson Hole, the last of the earnings. I don't know why we're not a little bit more concerned about the whole Russia thing. I would have thought that would have affected the stock market, the oil markets a little bit. I guess I'm wrong. We're just going to let that slide like it didn't happen. But okay, I'll roll with it too. So we'll be back tomorrow. Do this all over again. You guys enjoy the rest of your evening. And yeah, thanks for watching. See ya.
Hey, Dustin.
Yeah.
Everything good?
Yeah, I'm good.
Sure, everything's good?
Yeah, man, I'm fine.
Okay.